The stock market is getting dangerously close to overbought in the short term. Welcome to My Finance Teacher. While we've had some nice gains even in the difficult bear market over the last few months, we are now down to a minimum tiny position in SPY and triple Qs. By the way, here are our recent trades, which are all shown in the model portfolio for the members at myfinancesteacher.org. Starting with May, and I've showed the trades before May in one of my older videos on the stock market. We got in and out a few times, starting with getting in between late May and early June, then between mid-June and the first third of July. And our latest entry was in late July, catching up some of this rally. And more recently, I've been gradually reducing my allocation with relatively equal-sized tranches. Looking at the cycle duration, while the intermediate cycle at 56 days long is still very young, the daily cycle at this length is already getting old. So perhaps the 200-day moving average, which is a bit higher compared to where the markets closed on Friday, might provide some resistance. And I think the stock markets are likely to drop down into a short-term daily cycle low. Usually daily cycles last for a couple of months, sometimes stretching to 3 months long, so I do expect a bit of a decline in the stock market, perhaps over the next 1 to 2 to 3 weeks. Looking at RSI, RSI is at around 71.7 right now. Slightly overbought, a little bit of a danger sign, not extremely dangerous at the moment. Perhaps the markets can still go a little bit higher, again, to test that 200-day moving average, to push RSI slightly further into overbought before markets drop down again into the short-term daily cycle low. And looking at Bollinger Bands, by the way, I forgot to show the Bollinger Bands over here. Usually repeated pokes above Bollinger Bands often lead to a bit of a reversal, in this case from upward momentum to a downward momentum. We've had some pokes in late July. We haven't had pokes since then yet, but perhaps there will be some repeated pokes if the market reaches to that 200-day moving average over the next few days. And again, seeing those pokes might actually be another danger signal. So chasing and buying here is probably a bit dangerous. But who's buying at these heights? Well, look at the confidence levels. Smart money, the blue line, is down to neutral right now, while the dumb money confidence, the red line, is very high. It's usually the smart money that performs better, so we do want to follow them rather than the red line dumb money. Next, the optimism index is also pretty high at 73. It can still be higher, sometimes it does reach as high as high 80s, but buying here is clearly dangerous. In relation to the market optimism, generally you want to buy when there is this proverbial blood on the streets. You want to buy when the optimism index is all the way down at the bottom. Next, let's have a look at cryptos. Bitcoin chart is in front of you. The last time we looked at Bitcoin was actually all the way down in the mid-June. The first thing I want to point out is at the bottom of the chart, which is the 10-day correlation between Bitcoin price and triple Qs, QQQ. In the years before 2021, for example, last year, while this correlation was more positive rather than negative, we could still see consistent swings between those positive and negative correlations. But in 2022 or starting sometime in late 2021, this correlation is overwhelmingly positive. It's only rarely that this correlation drops down into the negative area. So while I do expect the general stock market to correct down, although in the short term, down into the short-term daily cycle low, it also says that there is a bit of a danger in the crypto markets as well. Let's zoom in at the daily chart. The last time we looked at Bitcoin was over here in the middle of June, on the 15th of June. And at that time I mentioned that due to this capitulation, due to this huge drop, it wasn't likely that the previous cycle would continue for the usual duration of 2 months. I said that we were pretty close to the cycle low, and that's exactly what happened. This cycle low on Bitcoin did actually take place only 3 days after that video, giving us a relatively short cycle of lasting for only 37 days. Usually the Bitcoin cycles do last for about a couple of months. The ongoing cycle, though, is already 58 days long today. And usually after a very short cycle, we would expect a bit of a longer cycle to bring the average back to its normal. Same actually applies to the general stock market. This previous short-term daily cycle between mid-May and mid-June was unusually short, lasting for only 28 days, which in turn followed this unusually long cycle lasting for 85 days. So again, after this short cycle, it's quite normal to have a bit of a stretched cycle, which is 56 days as of Friday. And coming back to Bitcoin, the same here. This cycle might stretch for another few weeks, but I would expect Bitcoin to follow the general stock market down, as I mentioned, anytime within the next 1 to 3 weeks. Looking at technicals, one might argue that there is a bit of a rising, narrowing wedge over here, which statistically generally is a bit of a bearish sign. And if you look at the candles today, especially the top of this wick of today's candle, looks like it came pretty close to that resistance from the mid-May cycle low that's somewhere around $25,000. So that previous cycle low might again provide some resistance over here. We might see general stock market and cryptos correct down into the short-term daily cycle low. Is it going to happen tomorrow? Is it going to happen the day after tomorrow? Nobody does know the future. I only share my views with you, and in return, of course, I want to know what you think about the general stock market as well as cryptos. Let me know down in the comments below. And looking at the crypto fear and greed index, yeah, it's close to neutral. It's actually below neutral at around 45 right now, which normally would not be much of a danger sign. We have often seen this crypto fear and greed index go as high as 90 and even above that. But remember, that's usually in the bull markets for crypto. Over the last year or longer, we've observed a bit of a bear market. The previous counter-cyclical rally in the bear market in cryptos brought this fear and greed index all the way up to 60. So anywhere around 60 is already a bit of a caution sign during the bear market, while the caution signs are much higher around the level of 90 during the bull market. So a related, really interesting question here is whether we have seen the bear market low on Bitcoin back in mid-June. Has that $17,500 per Bitcoin been the low that we've been looking for, or are we going even lower over the next few months? Again, let me know down in the comments below. While you're there, I would appreciate it if you hit the like button and of course share the video with your friends. Have a nice day. Bye bye.